What's going on, everyone? It's your boy Moo Trades. Hope you all had an amazing trading day. Today was a bit tricky in terms of the price action and what we saw, but as long as you stick to your rules, stick to only taking the high probability trades, it's going to get you on the right side of the market most of the time so you can be a successful trader in the long run. So in this video, we're going to be going over my set of rules and what I saw in today's price action. We're going to be going bar by bar. So let's get into the video. Let's start in the overnight session, and I'm just going to be letting you guys know what I'm trying to think about on a daily basis as these bars are printing on the chart live, because day trading is as much about common sense and just how you interpret these bars as it is as having a strategy and then executing on that strategy, and obviously learning from your mistakes and then capitalizing on the high probability trades that you see. So we're about an hour before market open, and we're clearly just working sideways. So in the rules of the trading range, it's obvious that you just want to buy low and sell high. That's objective number one. We want to buy at the lows of the range, sell at the top of the range. On top of the fact, this entry that we have right here, we had a new high, we went down, we had a break in this short-term downtrend, we have a new low, and it's also a second entry long. So we have one leg down here, we have a first entry long, we went down again, we have a second entry long, exactly where we're expecting to have some buying. We've already been rejected at these levels multiple times. So for all those reasons, this trade is worth the risk in my opinion, and we ended up working higher. So now we have a clear, concise uptrend. So even though that we're reaching the top of the range, we don't just want to blindly sell at the top of the range, because remember, down here we have a second entry long. It's a nice bullish signal bar. We have a leg working down. We had a break. We have a new low. In this case, the uptrend is still intact, so we don't just want to sell here. It would have worked out, but if you actually would have taken this lower high and ignored the short-term uptrend, you would have been trapped, because the rules of these uptrends are that this is still intact until we have a clear break, test at a new high, and only then can we start looking for trades in the other direction. So here we had a break, attempt at a new high, and then we started working down. So at this point, we're still just working sideways. The market is opening right now. We do get the new high of this uptrend, so we can potentially start to look for a short setup. You do get a nice bearish signal bar here, but it's hard to tell if we are really going to work down, because we did have a significant move up out of this trading range, but an aggressive trader might look to sell here. We do have a lot of room to the EMA, so I wouldn't blame you for taking this trade, because once again, we had the break of this short-term uptrend, clear new high. So the smart traders are actually going to be still looking to sell with that downward bias. But at this point, there's really no trading it's a no trade zone right here, simply because look how many bars are stacked. So I'm staying out of it. And we do end up just finally working lower. So now that we do start working lower, I'm going to be looking for short setup. But even in that case, like when you see all these bars stacked, and now at this point, it's been about half an hour since market opened. So market opened right about here. And to this point, 30 minutes into the market, there's really no reason to try to force any of these trades. Now, it might be tempting, but at a bigger picture, you just want to take the obvious trades. You want to take the obvious setups that follow your rules and that are going to be at least trades that you are proud of. So here we get a nice signal bar, but we're away from the EMA. So once again, I'm gonna wait for that excellent setup. And here we have the break, new low of this short-term downtrend. Notice how I'm not redrawing the downtrend into something like this, where we have a significant amount of space. What I mean by that is, notice how nicely this downtrend fits all these bars. It's very, very concise. And if we zoom out, we're actually reaching the lows of what we had previously drawn as the range lows. So it could be time to start looking for prices to start working higher again, because once again, we're looking to buy low. We have this nice downtrend. We have a break. We have a new low, meaning the downtrend could potentially be over, on top of the fact that we've bounced at these areas multiple times. So if we get a higher low, which we have right here, nice, excellent bullish signal bar, clearly closing above the EMA, closing on its high. This is the high probability trade in my opinion. And what happens? We see prices do exactly what we would expect. So we were at the bottom of the range, we work all the way to the top of the range. We have our clear, concise uptrend. So we have a break of it. Let's see if we can get another long entry, expecting a test at a new high, because once again, we must respect these short-term uptrends. So here we have a second entry long. So we have a new high, first entry long, second entry long. Now this is a double top, so it is a bit more risky, but the fact that once again we have an excellent bullish signal bar closing on its high, that's worth the risk in my opinion. Higher probability trade is actually if we get a higher low. And what are we presented with? A nice looking higher low. We almost tested the EMA, and this is just confirming that the buyers are still in the market. We still are trying to test the new high of the day, and it worked out for a nice trade. Now at this point, we do get that new high of this short-term uptrend. So the short-term uptrend had a break, new high, and now once again, it could be reasons to hit the brakes, zoom out a bit, and think, okay, we're at the highs of the day. We had some selling at these points. We already got rejected once. Let's be a little hesitant on going long for now, because the uptrend could be over and we end up just once again turning it into a range. But what do we do in ranges? We buy low, sell high. We have a nice bullish signal bar here, room to the EMA at a larger picture. So we have a new high. We have one leg down, two legs down. So it's really, if you're looking at the larger picture, it's a second entry long, similar to the first trade we had in the day. So we have a new high, first entry long, second entry long. And what do we have here again? New high, first entry long, second entry long. We do have this short-term downtrend, break, steep leg to a new low, meaning this is unsustainable. Whenever you see a sharp move down like this, it's not sustainable. You really want to see in a downtrend or uptrend something that looks 45 degrees if you're really going to consider it a leg. Something like this, it looks more sustainable than something straight up or straight down. So that's another reason that I think this trade is worth the risk. You're buying low once again, and prices turned exactly how you expected them to. So now at this point, we're just very sideways. We're in the middle of the range. You never want to take any trades in the middle of the range. I've been burned too many times trying to pick a higher low or lower high just straight into the middle of the range. So definitely wait until the extremes for an entry. And what do we have here? We get a nice looking higher low after we had this failed breakout. So we finally broke out the top of the range. We were working lower. We're presented with a nice lower high below the EMA, a bearish signal bar, expecting to go to the lows of the range. And that's exactly what ends up happening. So once again, we're at the bottom of the range, and we are potentially looking to buy, but we really don't get any opportunity to buy. Now you could argue for this trade right here, because we have leg working down, we have a break, we have a new low, we test that low again. So you know what? This is not a bad trade in my opinion. It is just getting a little bit stacked with these bars. I mean, as was this one, but you know what? I'll mark this trade because for the same reasons as we had here, we're looking to buy low. I mean, on the top, we're looking to sell high, but nice bullish signal bar. Downtrend had a break, clear leg to a new low. So many tests at this level. So when you see a bullish signal bar like that, it's worth the risk. But other than that, that's really all the high probability trades I saw during the day. So even on a sideways day where it seems like the price action was pretty stagnant, pretty hard to read, you still get 1, 2, 3, 4, 5, 6, 7 high probability trades, and that's only what I saw. 8 here. Well, I guess this is the one I marked that you shouldn't take, but in any case, in every single day price action, you're gonna get a certain amount of trades, whether that's 1, whether that's 10. It's about being patient, capitalizing on those trades, and following your rules, not forcing any trades. If you start forcing trades, revenge trading, letting your emotions get the best of you, that's when you start running into trouble. But in any case, that's gonna wrap up the video, guys. Hope you had a good one. Hope you guys learned something. Let me know what you guys think in the comments. Have a good one. Peace out.